Morning, everybody. It's the 12th of May. We are Signal Centre Talking Ball. I'm Joe Noble, joined by Steve O'Hare. Good morning, Steve.
Good morning, Joe.
How you doing?
All right, sun is
Good.
shining again.
Indeed, it is. Let's hope it continues. Um, all go on the markets again yesterday. A bit of heavy selling in equities in particular. So we'll get stuck into those charts shortly. More from Steve on that front because FX is not where it's at the minute. I don't think on the charts. But in terms of what's going on in the headlines, obviously there's a bit of tension in the Middle East. Israel stepped up its attacks on the Hamas ruled Gaza Strip overnight. We don't want to be seeing those escalating again, but unfortunately it is, and it's wobbling the markets a little bit. Of course, we've got the inflation worries as well. We've got CPI due from the States later today, so that will give us a bit of a firmer reading on what to expect from inflation going forward. In terms of COVID-19, looks like the US administration have said the Johnson & Johnson single shot vaccine, the benefits continue to outweigh the risks of rare blood clots, so continuing to go full steam ahead with that. In terms of the mini dispute between the British Crown and Jersey and France over fishing rights, that looks to be subsiding a little bit. Hopefully we can get that resolved fairly soon. Elsewhere, we had the Colonial Pipeline, which obviously hit by this cyber attack. That continues to cause disruption. So we'll see what sort of impact that's had on oil and the price of oil. And of course, yesterday we had a pretty severe sell-off in global markets, which we haven't seen the likes of for a while. I think it was the biggest move to the downside that we've seen this year, actually. There's some interesting charts that I saw on the Bloomberg email that we get each day about the amount of members in the S&P 500 hitting 52-week highs. It reached its highest level on the chart going back to early 90s. So, a very extreme reading on the breadth indicators. And when you have that kind of level of companies reaching new highs, it can often be a bit of a warning sign that things are due to cool off a little bit. Certainly not calling a crash by any means, because clearly there's a lot of participation ongoing in the markets at the moment, and we're seeing these dips bought quite aggressively. But we are at some seriously high climaxes in terms of stocks. So we'll get stuck into the chart, Steve. I don't know if you want to start, because
Yeah,
that's
sure.
where it's at the minute, rather than FX, and I'll do a sort of brief roundup on that afterwards. So I'll just hand it over to you,
Yeah.
and you can give us your thoughts.
Okay, mate. Yeah. Well, I mean, obviously, as Joe alluded to, we've seen a decent sell-off in the indices over the last couple of days. However, into the early hours of this morning, and currently we're seeing a bit of a pullback, bit of a relief rally. But I'm not sure how convinced I am by it just yet. Obviously, what we should do, Joe, maybe is call a crash every day, and we're bound to be right at least once, surely. I don't know, maybe.
Yeah, maybe.
Right, let's start off with Ftse. Ftse, we saw on these are the daily charts. Obviously, we had this upward trending resistance line, which probably lines up with a little bit of horizontal resistance around these levels here. You can see what an area we've got, and we're going to highlight it here. So that area is pretty much decent resistance, and it goes back all the way, so it's quite a serious level we're getting back up to. Normally when we have a decent sell-off, which we've obviously did last year, we get the correction higher. So in here we could say we've had a bit of an ABC correction. A, B, C. It's extended further though in my eyes, and we've got this, if we extend this to the right, we should see this sort of wedge formation forming on, and we're sort of towards the top end of that wedge formation. So we should really take this little bit of a reversal quite seriously. We saw the same on the 19th and 20th of April, and then we saw the grind higher from there. So a couple of things to watch. Normally, when you get a bearish outside candle, you'll normally it is a sign of a correction. The correction could be small or large. However, we've seen today's price action already posting, although we made a lower low compared to the previous couple of weeks, really. It has reacted higher quite aggressively and now formed what we call a bullish hammer, and that is a positive sign. Obviously, we've still got a long way to go today, so you know, it's out there. Whatever this candle ends up being, we could sort of see it push even higher and form bullish outside candles. So it's we've really got to sort of pay attention on the daily charts. But I suppose a lot more people are interested in really the intraday side of things. And even on here, we've seen this bullish engulfing candle, which is quite a serious one on the 4-hour chart, and that's got until 10 o'clock to play out. I think we've still got to get above this resistance here. Let's make it a little bit chunkier so we can actually see it. That resistance there, 70.40 for me would be the pivot today. I would, if I was bearish on the markets overall, I would look to sell just in front of there with a very tight stop just above. If we break it and hold above it on the 4-hour candle, I expect the move back to the highs. However, for me, it seems like a good risk-reward trade after the price action of the last 2 days. Again, if we think back to what happened a couple of weeks ago, then we don't want to get caught out again. So that's the opinion on the Ftse. On the DAX, it's a pretty similar situation. Price action over the last couple of days has been negative, not quite as negative as the Ftse, but again, we're posting a bullish hammer on the daily chart at the moment. So we've got off to a flyer. On the 4-hour chart, really the levels that we had in mind was this double top formation. We needed to break below 14,827. That would be a break of the neckline, and then we'd have a serious downward move on our hands. However, as we said, we can now highlight, if we jump to the hourly chart, we can highlight a double bottom formation here. So this is what we've got. We've got this swing low here, this swing low here, very similar swing lows. Don't have to be exact. And then what we've got is we've got the neckline here. So the swing highs, which has happened twice. So it's a double swing high, which is quite tasty looking. And effectively, we are breaking above it now. So is that the sign that we have formed a double bottom? We need to see a close. So we've got 5 minutes on this. Oh, this is a 15-minute chart. Sorry about that. I thought it was an hour chart. So a close above here on the 15-minute chart. And there's the projected move higher, 15,323 on the DAX. So good potential there. Let's see where it closes. Could be a good gun to the head trade idea. Looking at the Dow, saw a little bit of a better formation on the intraday chart. Well, better if you're a stock indice bear, especially on the Dow side of things. This is a shooting star formation. You see the shooting star candle here formed on the 10th of May. We had a good rally up to it, so we had a strong green positive candle. The shooting star candle is a warning sign. The formation is formed by a confirmation the following day with a really sort of like deep move lower. A really sort of, I mean, I really like these formations because they can be pretty trustworthy, if anything's trustworthy in this day and age. But they can be correct a lot of the times. More often than not, they are correct. That's what I'm trying to say. So obviously we've had a similar overnight move. We've had a bit of a pushback higher. And for me, the real level to watch, or the level maybe to fade into, if we're to trust this formation, the shooting star formation, then it would be maybe selling into levels just in front of 34,500. Still a couple of hundred points away from there. That was the sort of like the reaction level higher, and when we've come lower, we've broke back below it and retested and moved lower. So again, on the back foot with the Dow Jones, and and it's just whether we can continue this. We've had a Monday and Tuesday sell-off. Midweek, Wednesday, what are we going to do? Because I think if we do get the sell-off, it could well continue for the rest of the week. We normally see that on a Wednesday. It's quite a interesting day. Oh, this looks a bit scary looking. But yeah, and another interesting point, we had this double bottom formation, didn't quite play out, so failed. And then we had the move higher, broke below the swing lows here and here. We've now retested it. So 13,390 to 13,400 held really well. It was around about the 38.2% fib retracement level. And so that sort of support acted as a little bit of resistance. But again, we've sort of like the bearish momentum is slowing down ever so slightly. Looked like we could get a crossover on the MACD, and this is pushing it higher. Again, maybe potential to fade this move around about the 13,400 area, but a break above it, you know, you've got to respect what the indices are doing. Money is still being plowed into this. Now looking at the S&Ps, the recovery doesn't seem as good in the S&Ps. We've got this support line coming in at 4,110, held really well yesterday. That was really impressive, and we reacted off it. Again, overnight, we've tried to get down there and retest it, got down to 4,116 before the reaction higher. So it does feel like this European session is off to a positive start, but we really have to wait and see what the Americans bring us in the afternoon. The American session brings us. On the Aussie 200, this is obviously a decent commodity index to watch. And we've had this supportive trend line, which has worked really, really well. We broke below it yesterday, and we've broken through it, but we've reacted higher and we're retesting now. So again, one to watch. We seem to be at sort of quite pivotal levels right now, so it could be quite exciting day ahead. Now, the Nikkei, I've picked up on these supportive areas, and this comes in at 28,300, and we smashed below it last night. However, we've recovered bearish momentum. Obviously, you can see very strong breaking through there. We've recovered nicely. We're back up to the level again. Choice is, are we going to continue the recovery or continue the sell-off? The Chinese 50, again, I can't reiterate how much I think this is important. We're still in the downtrend. We're in a little bit of a triangle formation, and for me, it's a negative triangle formation. Resistance today comes in, or over the next 4 or 8 hours, comes in around about 17,390. That's the level to really with the market, the prices have to get above to sort of try and show any form of recovery. We can see there's potential for a head and shoulders formation, but as I said, I don't think this is going to work. Bit of a complex formation because we've got double shoulders. So for me, that's a really important line. Maybe the most important line would be the horizontal resistance here, 17,550. So again, plenty to watch on the indices side. Let's hop across to commodities. Obviously, as Joe alluded to, there's a real sort of oil could be quite a feisty one today. We're seeing the gas stations from Florida to Virginia beginning to run dry, and prices at the pump rose on Tuesday as the shutdown of the Colonial Pipeline continues into a 5th day. Started panic buying by motorists. The US administration, Joe Biden, projected that the pipeline, which basically sources nearly half of the fuel supply on the US East Coast, would restart in a few days, and urged drivers not to top up their tanks. But there's a lot of panic out there. So yeah, we're seeing a lift in oil prices, and we have inventories later today. Last week we obviously saw inventories rise and a decent sell-off Wednesday at 2:30 last week. But obviously that may not be the case today, so we may get a little bit of a push higher, reaction higher later today if we see that the oil supplies is dropping off. Obviously, thinking about the weekly chart, we're in a decent resistance area. Daily chart, we can see the sort of like the move lower has been rejected on 3 of the last 4 days, and well, this 4th day is looking a lot more positive, and obviously we'll be targeting initially 66.65 on the WTI crude oil. On the Brent crude oil, that equates to 71.04. So got to really sort of like respect these resistance levels until they break, yeah, today could be a real decent test of those levels. On the gold side of things, we've seen prices elevated over the last week. The double bottom formation on the daily chart, we saw it achieve its target quite nicely, and it has stalled around these levels. Yesterday's price action, although positive, was a hanging man candle, and we've got off to a back foot start today. So a little bit more negative this morning, so beware of that. On the shorter term chart, looking on the hourly, yeah, I mean, looks a little bit toppy. Looks like a little bit of a short-term top in place, so maybe potential to move to the downside to retest the 1818 level. Doesn't feel like it feels like we've pushed higher into this congestion area, but really do we need to retest the 1818 level? I'd like to think so, but that's only because maybe I want to buy the dip, and will I get the opportunity or not? Really, the levels to watch below that, 1812, and between 1812 and 1800, there'll be a bit of a vacuum move, I think. So we break below 1812, we should see 1800 very quickly. That's where stops would have been placed on trades that have been on longs that have been entered over the last few days. Copper grinding its way back to its highs, although it is struggling, but I won't stand in the way of that. That's a bit of a bad boy. Have a quick look at cryptocurrencies. We've seen the break back above 56,450, which is positive. However, we are forming a little bit of a topping formation again. You know me by now. I like to look for these head and shoulders formations. For me, this looks like quite a decent one, if I could actually draw it properly. So every time I sort of like try and sell Bitcoin, all the Bitcoin whales out there go against me and push it higher and make me look silly. So, but yeah, on a short-term chart, this to me is a bit of a topping formation. Would be better to see if we can we get a volume on here? Yeah, we can. Nice. So normally what you see is you normally see the volume rise into the left shoulder and into the head, and then normally the left shoulder, it sort of drops off a little bit, but then it should rise as we break the neckline. So yeah, it's for me, it's good potential because volumes are sort of like moving lower. But there's other things I think out there. The indices look a bit more interesting today. That's about it.
Thank you, Steve. Very comprehensive roundup there. Hopefully people got some good insight from that. Onto the FX side of things, which isn't as interesting, I don't think. First up, dollar index, which is often the starting point for our FX analysis. Yesterday, not really a lot happening, but I would note that dollar index does appear to be finding some support around about the 90 level, which is also a 78.6% fib level from these lows that we posted in January to these highs that we posted on the 31st of March. So while that's the case, there is scope for a potential bounce to the upside. I would be cautious though of this candle here because it was quite an impulsive move to the downside. What we have there is a Marubozu candle or Marubozu candle. So often the 50% level of these candles can act as a little bit of resistance. So bit of a barrier for that to overcome before we can get bullish on that. So we're looking for maybe a test around about 90.60 level. So we'll wait and see what happens with that. I think unless we can overcome that, it's probably a case of selling into rallies for now. Although, you know, we do have a sequence of higher lows, but clearly the overall trend isn't very good for dollar index. Onto euro dollar. Flip side of the dollar index, we can see that we're seeing some resistance around this level here at 21.55. Bit of stalling, a bit of a red candle today, bit of selling, but overall, you know, we're trading within this bullish channel, so we can expect there to be maybe higher prices. I'd be looking for a retest up at these sorts of levels at 122.40 ish. I am mindful though that there could be a top pattern forming here, although it's very speculative to call it at this stage. There is arguably a head and shoulders forming, but it's only a potential one until that neckline breaks. Until then, it's only speculation. Maybe we'll get a formation of a right shoulder up there, which would be a bit complex because obviously we've got this high here that was posted on the 25th of February. But keep an eye on that, not ruling it out, but at the same time, it's, as I say, highly speculative at this point. If we look elsewhere, sterling continues to be pretty bullish. We have broken out of this trend channel. We broke out of this range with a really impulsive move to the upside here on the 10th of May, stalling a little bit at the underside of this broken channel. Above that, we've got resistance at 142.41, which was this swing higher back from the 24th of February. If we can overcome that, then we'll be looking to target a move to 143.45, which is a measured move of this small range here that played out between the 12th of March to the 10th of May, as you can see there. So projection, that move higher, we get up here at 43.45. So at the moment, looking pretty bullish for sterling pairs. Look at sterling yen. Obviously, yen, one of the weakest currencies around at the moment. We can see a break from a wedge to the upside there. So looking like we are going to see a continuation higher over the short to medium term. Taking out these highs here as well that we posted on the 7th of April. So looking pretty good on the sterling yen front. That would be a case of buying dips for me in the short term. If we look at some of these other currencies, euro sterling, I was looking for a head and shoulders to form, an inverse head and shoulders. So this was the left shoulder here, this was the head, and this was hopefully a formation of a right shoulder. It's looking a little bit messy now. We did see a big old push of volume on this candle here, which was a doji candle actually. So quite a lot of indecision that was posted around about here. But now actually we've broken down from a wedge pattern, so that may suggest that we will see a continuation lower in line with the dominant trend there. In terms of the next support levels, I've got one down at 85.11. If we take out this low from the 5th of April, then we're heading down to these lows that we posted back at the beginning of 2020, which is down at 82.75. So not really sure what to do with that at the moment. Probably a case of selling rallies, I think, for now, in line with the dominant trend. If we can start taking out these highs up here at 87.16, then there is an argument for a bottom pattern having completed, and we can start flipping our bias to the other side and expect higher prices. Dollar CAD, no let up in the selling here. Obviously, oil is very much in the story, in the news, and that is linked to the Canadian dollar price. We're down at these lows, although we are stalling a little bit. It doesn't look particularly great, so I think lower prices can be expected, although don't rule out a relief rally to the upside to give potential opportunities to sell into. Dollar yen, still my favorite one to trade if you want to be bullish of the dollar. I think this short-term trend highlights that there is strength on offer there, and I think we can head up to the 110.96 level in the short to medium term. So I'd be buying dips on that because the yen is still so weak, but obviously the US dollar isn't really playing ball on the upside at the moment. So just keeping an eye on that for now. I think that pretty much rounds it up. Just looking quickly at some of these risk currencies, Aussie Yen did make new highs actually on a break above 85.45, but was rejected with quite a good looking shooting star candle. So maybe we'll see a corrective move to the downside on that. And finally, Aussie dollar That rallied quite nicely into a 78.6% fib level from these highs that we posted back here on the 25th of Feb to these lows that we posted on the 1st of April. Again, I've got a drawing of a potential head and shoulders pattern on this, so keeping a close eye on this. If this head and shoulders is to play out or is to form, then you'd like to think that this is probably going to be the end of the upside move, and that we can maybe speculate on a move down towards this neckline. If the neckline were to break and confirm the head and shoulders pattern, then we could speculate on a measured move down to these targets here at 70.60. So from a risk reward perspective, really quite nice, but it's got a lot of work to do still. That's the wrap up for me on the FX markets.
Cheers, Joe.
Okay, gun to the head trades from yesterday. Not much positive to speak about, unfortunately. I went long of the Ftse, was hoping that the buyers would step back in after the initial sell-off that we saw in the morning yesterday. That wasn't the case. And Steve, you were stopped out on Bitcoin. A bit of volatility yesterday, but didn't really go anywhere. There wasn't any big moves. So we're coming off the back of 2 losers each. Time to get back on the horse, Mr. O'Hare. What are you thinking today?
You know what? I'm sort of undecided, really. It's really watching this. I mean, this is only a short-term chart, but felt like the DAX was going to break through and hold. It closed above it on the candle, but this candle is looking pretty negative. So has the break failed? And is it the right one to play? Ftse for me looks like a shooting star formation. So let's go. Toss a coin. Let's go. Ftse. We can have the stop really tight at 7,005. That'll be a new high. Getting short at 69,888. And what we're going to go for, let's go for 680 points on the downside to get us 4-1.
Boom!
6,920.8 we're looking. So yeah, fading this early morning rally in the indices.
Lovely. I think I'm with you, Steve. When you were going through the DAX chart, I had a look myself and looked like it was running out a bit of steam. I've got a resistance level on my chart at 15,194. We rallied pretty close to it, but looked like we have stalled. So I'm going to fade the equity markets as well. So we're all in on equities this morning. 15,147 is where it's currently at. I'm going to have a stop at 15,205, so just above a round number. And I'm going to go for another negative day. I mean, I could go for the supports that we've clearly posted around here at 15,000. But if the selling really gets hold today, as it did yesterday, then we can easily see a capitulation down to these sorts of levels at 14,828, which is the swing low from the 4th of May. So that's what I'm going for today, which would be 5.67R.
Nice one.
I think where I've had my big winners before on the gun to the head challenge has been on the DAX and going for outrageous moves. So it's not uncommon. Right, that's our trades for
Yeah, good luck with
today. Okay, so what have we got to impact markets today? Well, I touched upon it early on. I think the big number that we need to be paying attention to is the CPI data at 1:30 out from the US. Obviously, inflation is a concern at the moment, and that's unlikely to go away. The CPI reading will either confirm or reject the notion that inflation is rising at an uncontrollable rate, and therefore we may need the Federal Reserve to step in and take action, and obviously that would mean the raising of interest rates. And as we know, there's a lot of debt in the system. So what impact will that have? I think we're expecting to see 2.5% inflation. So anything above that, then reach for your tin hats, I think, because we may see a few more worried market participants if that's the case.
I don't think that works, mate. I just don't think the sort of like the interest rate calming inflation down works. It's you got to look at different models now. The world is different to what it was years and years ago, when raising interest rates would sort of like put a cap on spending.
Mm.
You know, you've still got huge access to credit, and I just think it'll be a disaster. I just don't think that they can afford to do it. They've just got to let it play out. I don't know.
Yeah, maybe.
I don't know. Just don't be too reactionary, Mr. Fed.
Yeah. Okay. So it's also the Muslim Eid al-Fitr festival, which marks the end of Ramadan. I believe there's a few celebrations. Please forgive my ignorance, but yeah, maybe that'll have an impact on markets as well today.
When does the
Okay.
Ramadan end? Is that today then, or
Yeah, I think there's I don't know. I think there might be a couple of ends to it, depending on what variation of religion you follow. I don't know. Again, apologies for my ignorance. Let's wrap it up there, Steve. We'll be
okay,
back
mate?
tomorrow, and good luck if you're trading today. See you tomorrow.
Cheers.
Bye bye.